Hi there, welcome to Kneppy Invest. We have 3 minutes left in the closing auction, but another trading week has come to an end. And in today's video, I'm going to go through 20, actually, I'll go through 21 companies. These companies released interesting announcements during the week, primarily trading updates, including profit downgrades and profit upgrades. There was also some other interesting announcements in there in regards to regulatory reforms. One company, it's all over. That's been confirmed by administrators. Another company received a windfall from the Tanzanian government. When I say windfall, it wasn't directly from the Tanzanian government. They were in a legal dispute with that country, and they won. Got a lot of money from them, and yeah, just a lot of trading updates. We'll also have a brief look, maybe a brief look at one Appendix 4C that I might do a standalone video on because this is really important. Appendix 4C, a company I will never own, more than likely will never own, but I think you do have to be careful in regards to these type of companies. So interesting day on the NASDAQ, down about 2%, 2.3%, primarily driven by a bad day for Netflix and Tesla. I think they both released some trading updates as well. And even though Netflix subscriber numbers went up a fair bit, they missed on their revenue. And I think the same thing happened with Tesla as well. So on to the companies that released interesting announcements on the ASX during the week. So about 20, 21 companies. I think it's 21 companies. And I'll start on Monday. In fact, Monday was the busiest day of the week with 7 interesting announcements on this day, led by Vulcan Steel, VSL. Vulcan Steel did release a profit downgrade. In fact, their share price up 0.8% today. But we'll have a look at the chart. You can see how much of an effect a profit downgrade can have on a company. And to be honest with you, it could have been worse because I've seen profit downgrades leading to share price drops of 40% or more. And this is a classic profit downgrade. So the previous guidance in terms of net profit after tax was for it to be between $95 and $109 million. And this includes integration costs. So obviously they made an acquisition and they've got an including integration costs line, also excluding integration costs. But I do understand what they're trying to get at. The integration costs are just one-off costs. They're not an ongoing costs, more than likely. And they just want to say, hey, if we didn't make this acquisition, these would be our profit after tax numbers. But unfortunately, the previous guidance was for it to be between 95 and 109 million. Now they expected it to be between 86 and 89 million. So a classic profit downgrade. So is there anything else? I don't think I'm going to show you any commentary. So let's have a look to see how the market punished Vulcan Steel. In fact, we'll have a look at the 1 day, 1 hourly chart. So a beautiful downtrend. As soon as they released this announcement, the share price dropped 5% on that first hour and then just kept on dropping. So if you saw this particular profit downgrade, the best time to sell was in that first hour. In fact, it was on open because the share price on open was $8.40, which is significantly higher than it is now at $7.27. The share price just kept on falling, falling and falling. But we have seen a little bit of rally in the last 4 hours of trading on Friday. And the main thing I was thinking, is there any support at around about $7? So if we just have a look at the daily chart. So once we get to about $7, particularly above $6.86, $6.80, a really good support level for this company. So this company has been on the ASX since late 2021. And whenever the share price gets below about $7.20, we see the share price rally. In fact, when the company IPO'd, the share price was around $7.20. Share price has been as high as $10.40 back in early 2022. But if you just look at this chart, share price really going nowhere over the past 2 years or since it's IPO'd. And if you think the floor is in, and when the share price gets below about $7.20, now might be a time to take a position in this company. Now, to be honest with you, I have not done any research on a Vulcan Steel. I'm assuming they produce steel, just like BlueScope Steel. But that could be a really bad assumption. Who knows what they do? Now onto MMA Offshore. I was going to call them Miriam. But MMA Offshore did the exact opposite to releasing a downgrade. They actually, well, it's not really, because this wasn't necessarily an upgrade, but it was a trading update from the company. And a lot of times when company does release a trading update, sometimes you have to look at previous guidance just to see if it was an upgrade or downgrade. But they have advised the market that they anticipate EBITDA, again, for some reason, companies love EBITDA. Why just not give us profit? But they expect EBITDA for the full year to be between 66 and 68 million, an increase of over 100% on the previous financial year. Probably the most important part of this announcement is just the second paragraph. And this is just Coventry saying things are stronger than expected. That's a good sign for this company moving forward. So this is the paragraph. The business had a stronger than expected second half with a number of small vessels trading through the traditionally quieter Southeast Asian monsoon period. So things are moving well for MMA Offshore. I have been a holder of this company, and I actually did take profits, and then I bought back in based off this announcement, but the share price did really nothing after this announcement. And the main reason is the share price at $1.25 is at a resistance level, because the share price did get up $1.25 back in March and then pulled back. And if the share price gets to say $1 and say 27.5 cents, $1.28, even $1.30, that means the share price would be at a long-term high. When I say a long-term high, I am meaning a long-term high. So the last time the share price was $1.25 was back in 2019. If it gets above, say, $2, the last time the share price was $2 for this company was way back in 2016, when this company was experiencing a lot of problems. Now, they have diversified their revenue streams. This is a stronger company, stronger balance sheet, and I think there is potential for the share price to move higher from here. If we look at the 1 hourly chart, hasn't really gone the direction I expected when I did buy in. I think it was the day after they released the announcement. I did expect maybe a little bit of a rally in the share price, but really the share price has gone sideways, but nothing to be concerned about yet. Share price going sideways, a little bit of consolidation. Those who want to sell out more than likely have sold out. Really good volume coming in, particularly on the hour. And the share price actually did get to a high of $1.29.5. But because the share price did get to a long-term high, we did see a little bit of selling coming in on that first hour. So I do expect the share price to go up from here. And if you just look at the 1 hourly chart, nice uptrend. Even in the daily chart, still a nice uptrend. Still an uptrend. So nothing to be concerned with trade with MMA Offshore. Another company I've been following, I have put in a bid for Vysarn. It has not been hit yet at 16 cents. Not a very big bid, but it's at 20,000. That's all I put in, 20,000 shares. And then if the share price keeps going up, they release another trading update, a profit upgrade. In fact, I might buy more shares. So just build my position if this company keeps releasing profit upgrades. And they've released 2 profit upgrades in a fairly short period of time. So if we look at the announcements for Vysarn going back 3 months, there was an earnings update on the 11th of May, another earnings update on the 17th of July. So that's 2 in 2 months. So just to have a look at the first earnings update in May. And this should have been a sort of the announcement that I took a position in. And the company forecasting profit before tax. So this is better than EBITDA, in my opinion, because tax is not really under the control of the company technically, but net profit before tax of 6 to 6.5 million, which was an increase from the previous guidance, which was 5.1 million. So a profit upgrade, a true profit upgrade. Now, in this announcement on the 17th of July, this was another profit upgrade. Now they expect profit to be between 6.8 and 7 million. And that's why when you look at the chart, it's another beautiful chart for Vysarn. So this is the daily chart, and this has really taken off. So I started getting interested in this company back in January, February, when we started to see share price starting to rise. There was a nice little pullback in March. That was a time to think about taking a position in this company at 9 cents. Not a particularly high markup, only 62.8 million. So we're talking about fairly low PE if this company hits their targets, which they more than likely will. And when you look at the hourly charts, just a stairway to, well, I won't say stairway to heaven, but this is a nice staircase just going up. Nice volume as well. I wouldn't say nice volume, but good volume as well. So that's the reason I put a nice little bit in. If I see a significant pullback, to say 14 cents would be my pullback level. I'll take another or add to my position if I see that as well. So that's Vysarn, an upgrade. Then we have a look at another company called Cyclopharm. I think it's called Cyclopharm, CYC, Cyclopharm. And they released their half-year accounts update, record revenues. I like when they put that sort of wording in the title because we know it's more than likely going to be fairly positive. So Cyclopharm, some sort of health company, a radio pharmaceutical company servicing the global medical community. Do they sell, what do you call it, instruments, that sort of thing, products? Who knows? Anyway, I haven't done any research on this company, but a record revenue of 15.3 million, up 39% on previous corresponding period. And then they talk about other stuff as well. $18.9 million of net cash. Well placed to deliver on USA launch. Ooh, that's exciting. And progress Cyclopharm's beyond PE strategy, whatever that means. If you know what that means, just leave a comment in the comment section. So the main thing is the chart. So there was a little bit of positive reaction from this announcement. So the share price on the day increased about 5%. The next day share price got up to $2.40, but we have seen a pullback in the share price in the last few trading days. And we can see that in the hourly chart. So in fact, if you look at the daily chart, beautiful uptrend developing in this country, in this company since April. Share price has increased from $1.50 to current share price of $2.20. If we look at the hourly chart, we have seen a pullback. So when I say these sort of pullbacks, that's when I become interested and might take a position. Share price now at $2.28. So what did it close at? $2.28. So share price did close at $2.28. Your time is 4:18, which means trading view is 20 minutes behind, which makes sense. The last trade was at 3:58 and 32 seconds. So anyway, so share price $2.28. So anyway, so nice little update from Cyclopharm. I believe this company's market is 211 million. So you'd have to pay for this company. It says on TradingView that the dividend yield, they have a dividend, no price to earnings ratio, but they do have a dividend. But that dividend yield is 0.4%. Now onto another company that released a positive trading update. So we're expecting to see companies release negative trading updates, but just positive trading updates after positive trading updates. And this company is Endeavour Group, another company I don't know much about, but I'm assuming they're into looking after the environment or making money from the environment, which might be a negative thing or positive thing, depending which way you look at it. So another trading update. This one was positive. So they mentioned here normalized EBITDA. Just use profit. And instead of saying normalized, just say profit. Even just say EBITDA. Anyway, so normalized EBITDA anticipated to increase by over 35% year on year. Was that? No, that was on the 24th of November 2022. Now they expect EBITDA to be 50% higher. So this was a profit upgrade. So instead of 35% higher, now it's 50% higher. But again, this is EBITDA. I just don't like EBITDA and how much EBITDA is overused. I prefer profit, cash flow, even EBIT I prefer over EBITDA because it doesn't take into account depreciation, amortization, and both of those can be quite significant for many companies, and they know it, and that's why they use EBITDA. Not saying it's significant for Endeavour Group, but some companies use EBITDA because it doesn't include depreciation, amortization. Now, let's have a look at the chart. I actually do remember this one. I had a quick look at this one, and when you look at the daily chart, it's boring. It's just going sideways right now. This is a consolidation period after a beautiful uptrend. So what the market is waiting for here is some good financial news. So this could have been the good financial news the market was waiting for, but fairly low volume. Share price actually did increase on the day, up 7%, but the share price has pulled back the last 2 or 3 trading days. And more than likely, the reason it's pulled back is because shareholders who bought in a few months ago, maybe February, March, have become bored because share price is going sideways. They saw the lift in the share price and went, I'm just going to sell my shares out right now because it's up 7%. And that's why the share price has pulled back to 21 cents, to almost the share price it was before the announcement. Now onto another company that did not release a trading update, but did see the share price suffer by about 10%. And that's Endeavour Group. I'm not a big fan of this company. I think it's overvalued. There's too much hype around this company. Every single time I hear about Endeavour Group on Ausbie's the core. Everyone is raving about it, how it's a great company. But when I looked at it, it has very lackluster growth, and I don't think it's going to have much growth in the future, even though they do own those alcohol stores, wherever it is. They also own pubs. Anyway, this is in regards to regulatory reforms. The reason why the share price dropped 10% is in regards to regulatory reforms for poker machines in the state. And Endeavour Group says they welcome the opportunity to work closely with the government via participation in government-nominated work groups, blah, blah, blah. That's why the market got a little bit freaked out. But in saying that, there has been a little bit of recovery in the share price. So let's have a look at the 1 hourly chart. So when the share price opened up on the Monday, share price initially down 10.9%. And that was the low. The share price has rallied almost back up to where the share price fell from. So it's gone from a low of $5.45, is now back up to $6.04. But if we look at the daily chart, there's no reason to be interested in this company. Share price is actually in a downtrend. In fact, the share price has fallen from $8.40 in August last year all the way down to $6. This is a classic downtrend just by looking at the daily chart. So no interest in this company right now. I don't care what the analysis and experts say. I just don't think this company is an exciting company. I don't think it's going to have much growth. In fact, the price earnings ratio is 19.3 for a company that I don't think it's going to grow much. That's a pretty high price earnings ratio. Now, I could be mistaken, and maybe if you disagree with me, love to hear your opinion. So if you do disagree with me, if you think Endeavour Group is the greatest company in the world, love to hear from you. So leave your comments, your thoughts in the comment section of this video. Now to a company that's no longer with us, Oventus Medical. So let's go back 2 years. So this company used to produce sleep apnea stuff or sleeping stuff, whatever. I didn't follow this company too closely. They went into a trading halt in June last year, the 7th of June last year. It was the last time this company was traded, just after they released their Appendix 4C. So if I just open up the Appendix 4C, the last real financial report this company released, so the direct-to-consumer market model, blah, 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 I'll tell you what they do. Global leader in the management of sleep disordered breathing by providing a seamless, I'm not even sure why I'm talking about this because it's no longer relevant. So if we go have a look at the operating cash flow, so receipts for customers, 195,000, operating cash flow negative by 2.0 million. They were receiving government grants and tax incentives. No debt, so I'm not sure why this company, it owed someone some money, and unfortunately, and I think the reason they went into administration, and there should be some sort of announcement here talking about administration. So that was released on my birthday last year, 14th of June. So Adventus announces that the board has today appointed a couple of guys from Grant Thornton as voluntary administration. Is a procedure which is intended to maximize the chances of a company, or as much as possible of its business, continuing in existence. Unfortunately, 1 year later, this is what the administrators said. I think it might be this one here. 5 months after last announcement, delisting of Oventus, whatever it is. And this is what they said. The administrators have now completed their processes for the sale of all assets of Oventus Medical and have determined that there will be no return to creditors nor shareholders of Oventus Medical. Accordingly, there is no benefit in the continuing listing of this company. So this is the end of Oventus, and all shareholders have lost all their money. So that original intention to put this company into administration, well, it wasn't really, well, shouldn't say it wasn't needed, but the whole purpose for them doing it was for the continued existence of this company, and it's no longer in existence. In fact, it's been delisting probably now at the close of trading on Friday, the 21st of July. So come Monday, if you type OVN in ComSec search, more than likely it won't be there. So this is the end of another company on the ASX. So that's all the companies that release interesting announcements on the Monday. Now let's go to a company who saw its share price increase by 100%, only 75.6%. At one point in time, yeah, it closed at 7.2 cents. At one point in the day, it was 10.5 cents. So well over 100%. So why did Indiana Resources share price increase 75.6% on the 18th of July. So let's have a look at why. And it's in the announcement. So just zoom in a bit. It's in the title of the announcement. US 109.5 million award against Tanzania. So without really looking at this announcement, so Tanzania must have taken their mine or something, which was illegal, based off this International Center for Settlement of Investment Disputes, part of the World Bank, and they've declared in favor of Indiana Resources Limited, or maybe their partner. Indiana is a 62.4% shareholder of the combined holdings of the claimants, and United Republic of Tanzania have to pay them $109.5 million. And then there was another announcement, letter of demand for $113.6 million issued to Tanzania. Ooh. And then there's the investor briefing webinar. So on Monday, the 31st of July. So in 10 days' time, if you're interested in that. So let's have a look at the chart just to see why there might have been a little bit of sell-off on the day. Share price did get to 10.5 cents. So you can see that. This is the one out. Actually, this is the daily chart. So a big fat red candlestick, which is not what you want to see. So the share price actually opened near the high of the day. And then, you can see why the share price was sold off, because the share price was higher back in 2021. So those shareholders who bought on this back of this really nice run in 2020, 2021, those shareholders bought near the high, say above about 7 cents, saw their opportunity to sell out. And unfortunately, there was too much supply and not enough demand. And that's why the share price went from 10.5 cents, which was almost the high back in early 2021, all the way back down to 7.5 cents. No interest in this company yet. Whether they can get that money from Tanzania, who knows? Maybe Tanzania will be a problem. But if they do, Indiana Resources has a market cap, $38 million. Might have a lot of cash on hand soon. Now, on to another company, they released a trading update, and this is Coventry Group, which they own. They sell stuff. That's all I'm going to say. They sell stuff. I can't tell you exactly what they sell. Let's have a look at what they sell. No, they don't even say what they do. Let's have a look at another announcement. I'm just hoping it's some sort of announcement. They tell us what they sell. There was another trading update on the 20th of June. This company has released 2 trading updates in 1 month. Let's compare. A lot of companies put what they do at about section at the bottom of the announcement. This company doesn't do it. They sell stuff. Exactly what they sell. Demand remains robust for our primary end markets: mining, resources, infrastructure, commercial construction, and industrial. The group has very modest exposure to segments of the economy that are slowing. Okay, so on the 20th of June, they said their sales will be 355 million. Now they say their sales will be 358 million. So a slight upgrade in terms of sales. So 1 month ago, they said the EBITDA will be around 17 million. Now they say the EBITDA will be around 17 million. So I'm not sure exactly why they needed to release this other trading update. A little bit more clarity, a little bit more information in it. And how did the market react? Let's have a look. So the share price did increase 7.1%. So initially the market was interested. Not a lot of volume though. And let's have a look at the daily chart. We'll have a look at the daily chart first. Share price in a downtrend. So obviously the market expects this company to suffer because they sell stuff. But really they're selling stuff to maybe people who won't be affected, or businesses that won't be affected by the downturn. Exactly what they said. Share price fell from almost $1.85 down to less than 94 cents. And it does look like possibly the downtrend has come to an end. And if you look at the 1 hourly chart, it is highly liquid. You can just see that by the candlesticks here. And if I see the share price get above $1.15 on strength, that would be a good move. But not much interest in this company. If we look at the weekly chart, I just want to see what the chart looks like over long term. Yeah, so definitely not. I'd say this company isn't growing much just based off this. So not much growth. Haven't done any research on this company, so not much growth, low return on equity, low return on invested capital. So not in a growth area. You can just see that by the chart. And the low points, 2016-17, the bottom of the mining cycle. So this company is affected by the mining cycle. The interesting thing is, if you draw a line at the lows. So go all the way back to the GFC. Drew a line low there, low there. So whenever the share price of this company gets to about 50 cents, we'll say below 55 cents, that's the time to buy. That's the lows. It has hit that point about 3 times in the past 15 years and has rebounded every single time. So that's the only reason I'd probably buy this company, Coventry Group. The last company I want to look at, I wasn't going to look at this company, but I thought, why not, is XRef. So this company's share price has fallen a lot, and they did give, this company used to release Appendix 4Cs every single quarter because, the last time they released Appendix 4C was, I have to go back more than 1 year ago, was October 2021. No, January 2022. And then they were told by the, April 2022. And they must have been told by the ASX, they didn't, July 2022. And they must have been told by the ASX at that point, they don't have to release any more quarterly reports because they were cash flow positive and profitable for longer than they, not longer, but they just didn't have to release it anymore via the ASX. And then as soon as that happened, the share price just tanked. Maybe I'm being a little bit unfair with XRef, but this is a business update. And the main reason I wanted to show you this is simply because the share price actually did respond well after this. So sales up only 2.6%. Second half now expected to record a net profit after tax loss. So a company not profitable in the second half. AR grew 430% to 5.6 million. To be honest with you, not much. I didn't find anything too exciting within this announcement. Yet the market share, or the share price, increased 8.1% on the day, another 2.5% the next day. And if we have a look at the chart, share price of this company has been in, well, that's the weekly chart, has been falling since January 2022. Share price almost got to 80, actually got to 80 cents. Yeah, right on 80 cents. That was a high. Share price fell all the way back to 15 cents. So share price has been in a long-term downtrend. This is a classic downtrend, but it is showing some signs of life. I would like to see a little bit of volume. So we can see it was showing a bit of signs of life in November last year. So you can see the share price starting to rise. And as soon as it hit on the 150-day moving average, it pulled back. So we're still in that resistance zone. And I need to see the share price not fall any lower than 15 cents for me to be excited in XRef. Anyway, so the only reason I want to show you that was because bit of excitement in the market around this company. And if you look at the 1 hourly chart, yeah, share price actually moving into an uptrend in the 1 hourly chart. Now we move on to Wednesday. And we're going to look at a company that's recently listed on the ASX called Avada Group. Now, I had a quick look at this company because this was a nice little trading update. And the market cap of this company is not too high. In fact, it's around about 80 million, 58.6 million according to ComSec. So a little bit lower than I thought. So it looked nice. So I didn't know anything about this company. So underlying EBITDA, again, freaking underlying EBITDA or normalized EBITDA, just tell us about profit. So they talk about audited underlying EBITDA and forecast underlying EBITDA. Anyway, underlying EBITDA of 15.8 for financial year 23. They also gave guidance for financial year 24, which is between 20 and 22 million. So that's pretty nice growth. Now, again, we don't know what depreciation and amortization is for this company. It could be like 30 million, which means this company would not be profitable. Pretty high revenue, so they give a bit of revenue here. $183.2 million of revenue, which means that EBITDA margin, yeah, it's about 9%. So then I went, oh, it sounds sort of interesting. Now let's have a look at what this company does. And then they give the forecast of their financial year 24 numbers. And there is some acquisitions here. And then I saw this acquisitions, Wilson's Traffic Management. I went, oh, is this a traffic management company? So Avada is Australia's largest listed integrated traffic management provider with established operations throughout Queensland, New South Wales, Victoria, and New Zealand. They have 30 depots, 970 vehicles, and 2,000 dedicated employees. Now, I wonder if they've surveyed all 2,000 employees to see if they are truly dedicated. So not based off this business, I'm not that interested in this company. And more than likely, one of the reasons why they are growing is because sort of a roll-up model. They're just buying other companies, and that's how they are growing. Well, I could be completely mistaken, but just their business, not that interested in. Anyway, if you are interested in Avada, I'd love to hear from you. Nice little trading update from the company. Now, a company I've held in the past, I've done a few videos on this company. I said, is this company really cheap? Now, this company is Mitchell Services. Current market cap of this company is about 90 million, 94.51 million. Now, let's have a look at their quarterly investor update. This company is also doing buybacks. So buybacks are really good if the company is undervalued. That's when it's most beneficial for shareholders. So again, market cap of this company is under $100 million. So these are some of the numbers they have given us for the quarter. Have they given us any financial year 23 numbers here? Yeah, one number. So record quarterly revenue of 65.8 million, which doesn't mean much because we need to know the margins. But record quarterly EBITDA, again, EBITDA of 15.3 million. But again, this is one quarter. One quarter. So if they continue this sort of momentum, that means EBITDA for the year of $60 million. So that means this company is trading at 1.3 times EBITDA, analyzed EBITDA. EBITDA margin, 23%, pretty nice. Operating cash flow, $22.9 million in one quarter, but we don't know the capital expenditure. So we might have to wait for the August results, the full year results in August. Net debt reduction of 55% to 17.6 million. So the company has a little bit of debt, which is a little bit of a concern. Full year profit after tax expected to be between 6.5 and 7.5 million. So company trading on 95 million. Market means this company is or has a PE of roughly 15, which means it's not, based off the PE ratio, it's not that undervalued, just based off the PE. Based off EBITDA, yes. And they also have a dividend, with that dividend being 2 cents per share. So this was a nice little update from the company. And then I had a look at charts. So I haven't been following Mitchell Services that closely. First had a look at the daily chart, and I went, ooh, because the share price was in a downtrend. That's one thing I did know about this company. And for some reason, trading view sometimes just freezes. And when I update it, it goes straight back to one of the last companies I was looking at, Premium Investments. So let's have a look at Mitchell Services. And we'll have a look at the weekly chart. So share price was in this downtrend, which I portrayed by this sloping dashed line. Every single time the share price got to this downtrend line, we saw the share price pull back up until a few weeks ago. Share price has gone into a rally, really nice volume over the last 3 weeks, increasing volume. So this could be a breakout for Mitchell Services. This is a potential buy. That's what I've come to. That's my conclusion. And if you look at the hourly chart, you can see the breakout on the 29th of June. So that's actually a few weeks ago. Share price rose on that 1 hour 11%. And the share price has remained in an uptrend since then. So interesting story based off their EBITDA. Looks like it could be undervalued. That dividend company. This is a drilling company, by the way. So maybe they're getting more work. They talk about the drilling utilization rates or whatever they call it in the announcement. So it looks like potential breakout for Mitchell Services. Good announcement. Yeah. Anyway, Peninsula Energy, uranium company. Yeah, this has been an awful week for Peninsula Energy and their shareholders. Share price has dropped 28%, then 7.7%, and now another 8.3%. Share price has dropped from 18 cents to 11 cents, so that's 7 cents. 7 cents over 18. What's that? I can't divide 7 by 18. That's a lot. So 35%. We'll say 40% roughly. So share price has dropped about 40% in 3 days. Why has the share price dropped 40% in 3 days? Well, just look at the title of the announcement released on the 19th of July. Peninsula delays production and accelerates in-house resin processing. I think you can ignore that second part, the accelerating in-house resin processing. It's delayed production. Soon as the market sees that, they went, well, I'm going to sell this. Delayed production. And the one thing I think of when it comes to Peninsula Energy is disappointing. It continually disappoints me. So on the 8th of May, Lance rapidly advancing towards mid-year 2023 production. So let's see if they have given a time frame. I haven't actually had a look at this. So I can't really see. Strategy shift is likely to significantly delay the production restart at Lance whilst delivering a faster ramp up to full capacity. So maybe there is a silver lining in this delaying in starting production, but the market didn't like it. This company was on my watch list. You can see how the share price started to move up in the start of June. We saw the share price go from around about 14 cents up to 20 cents in a fairly short period of time. So I did put this onto my watch list, and then we could just see the share price absolutely take a nosedive the last 3 trading days on huge volume. If we look at if you zoom a bit out, the last time the share price was this low was way back in the start of 2021. So maybe this is a time to start thinking about Peninsula Energy, and maybe the market is overreacting, but just based off the volume and just based off the 3 big down days in a row, and just look at the 1 hourly chart, this would be my go-to to see if the downtrend has come to an end or the selling has come to an end, but continual selling all throughout the 3 days. So no end in sight to Peninsula. I'll still put it on my watch list, just have a quick look. Now, have a quick look at Northern Star. I didn't want to really focus on any companies that release trading updates or quarterly updates, but Northern Star did release a trading or their activities report, and the market didn't like it. I'm not going to even put it up here because when it comes to these sort of announcements, I will have a look. But the main thing is how the market reacts. And the market has reacted really negatively to Northern Star. In fact, the share price has fallen from $13.40 to $11.67 on huge volume, really big volume coming through on this particular activities report from the company. So the share price in a downtrend, a little bit support in the last 6 or 7 hours. So the share price hasn't dropped all that much on today's date, the 21st of July, but really a very negative chart, that hourly chart. Even the daily chart looks pretty negative because share price is in a downtrend or has just moved into a downtrend. So I still would pay attention to gold. So if you have a look at gold prices have been rallying over the last few weeks. So Northern Star share price should be rallying, but it's not. It's doing the complete opposite. And that's a negative in my opinion. So in fact, we should be able to compare the two to somehow. Anyway, so not a good week for Northern Star Resources. Didn't even have a look at the activities report. I'm going to leave that to the weekend. Sometimes I will leave announcements like this to the weekend. So that's the announcements on Wednesday, the 19th of July. Now we go to the 20th of July. First company is Michael Hill Jewelers. And I'm just looking at the reaction from the market. No reaction. Muted reaction. Maybe I shouldn't even include this. This is financial year 23 trading update. And I'd say sort of understand why the market was nonplussed, is that the word? Non-phased, unfazed, that's the word I was looking for. Unfazed by this announcement either way. Sales growth maintained. Group sales up 6% on last year, while economic conditions were more challenging. Second half sales down by 0.8%. Elevated gross margins, comparable EBIT, positive momentum in digital sales, healthy inventory levels. They made an acquisition. Then they talk about different economic regions or geographic regions. And the managing director and CEO says, while acknowledging the challenging economic conditions faced globally, I am pleased with the delivery of full-year sales growth in all 3 markets against what was a record prior year. So sort of okay announcement, and let's have a look at the chart. So this is sort of an announcement maybe I shouldn't have included in today's video. Share price of Michael Hill in a downtrend, just by looking at the daily chart. So the market is probably pricing in decreasing sales, decreasing profit for this company. Share price has dropped from $1.25 to 91.5 cents. And really, this announcement didn't really persuade the market that they're wrong, unlike some other companies. In fact, one company I'll show you later, I think the market got completely wrong. Now, into Flight Centre, now a lot of these companies I haven't had a look at their market reaction, so some of these might surprise. So Flight Centre released a profit guidance, and looks like it was positive. In fact, all these green days, geez. I read it and this is actually positive. So I'm glad the market does agree with me. Upgrades profit guidance. So this is another upgrade. So the most important thing here is, again, EBITDA. Underlying earnings before interest, tax, and depreciation between 295 and 305 million. So the previous guidance was a little bit lower than that. Previous guidance was for it to be underlying EBITDA to be between 270 and 290 million. So this is a profit upgrade. And the share price only went up 4%. But you can see this share price was in a beautiful uptrend before that. So let's have a look at the daily chart. Well, look at that. So a fair bit of volatility in Flight Centre's chart. There was a massive decrease in share price in late June. Share price went from $21.50 down to $18.50, and it's recovered all the way back up and beyond. And the 1 hour chart looks absolutely beautiful, just taken off. So this is a sort of situation or announcement I should have looked at. And more than likely, if I did have a look at this, I would have said there might be a little bit of resistance, but the share price has blown above this resistance. So if we just look at the previous high, which was right on $22, share price has gone above that. So a possible breakout for Flight Centre. And the last time the share price was this high for Flight Centre was actually back in April 2022, so more than a year ago. And the share price didn't stay at these levels for very long. And then the last time share price was that high was October 2021. Didn't stay at these levels that long. So maybe that's what the market is concerned about with Flight Centre. But all things go for Flight Centre. Anyway, next company is Zip. Now, I did have a quick look at the market reaction to this, and it was an interesting reaction. So this is the Q4 financial year 23 results. They say Zip continues to deliver. Now, I did have a very quick look at these results and then the market reaction at the end of trading. The one thing I wanted to see was any sort of profit, cash flow. But all they talked about was revenue, transaction volume, transaction margins, active customers. They gave us some nice little charts in here, or some, what do you call these, tables? So talking about revenue, transaction volume, transactions, active customers and merchants, credit card performance across core markets, or net bad debts, US monthly cohorts, net bad debts, capital management, just talking about how much cash they have, net inflows from divestments, that sort of thing, a liability management exercise, trademark infringement claim. Then they talk about regional updates, just still talking about revenue, transaction volume, transactions. I want to see profit and cash flow. And I say the market wants to see that as well. And they didn't really give us that, the rest of the world. Then they talk about the funding facilities. So let's have a look at the market reaction. So I had a look at that and I want to see a little bit more from Zip. So I'm going to look at the 1 hour chart for Zip, because this is where it gets a little bit interesting. So initially, the market really liked this announcement. So in the first hour, the share price increased 11.5%. But what happens, or what I want to see, is that interest remain. I want to see the demand for shares in Zip remain about the same or higher than the supply. Well, what happened? Straight after that 1 hour, that first hour, share price started to drop, which tells us there's more supply than demand. So that first hour was sort of like a facade, a mirage. It really wasn't a true representation of how the market felt about Zip's announcement, because the share price has now fallen below the share price it was before the release of this announcement. In fact, we've seen continual selling through the last 2 days after that first hour. So share price has actually dropped from 49.5 cents, which was a high in that first hour, all the way back down to 44 cents. You might say that's not a big drop, but that's a 10% drop, more than 10% drop. 49.5 cents to 44 cents. That's more than 10% drop. And the main reason why do you think there was selling? Why do you think there was more supply than demand? Just have a look at the chart. Share price has been significantly higher just by looking at the daily 1 hour chart. We look at the daily chart. So most shareholders in this company are in the red, unless they bought in the last few weeks at below 44 cents. And 44 cents is a fairly significant level just because that was the lows we saw back in June last year. And the share price was trying to stay above that level. So they're really struggling. You just see it struggling, going up and below that level for the last 2 weeks. So the only shareholders who are in the green or in profit for Zip are those shareholders who bought in less than 44 cents. That's why they were selling, because all those shareholders who just want to sell out, they saw that 10% increase in share price in that first hour. They saw that opportunity, and that's why supply overwhelmed demand. The company has to give us more indication that they are a viable business model, in my opinion. If you disagree with me, I'd love to hear your thoughts. So leave your thoughts, and maybe I could be persuaded otherwise if you leave a compelling argument. So that's Zip. Mineral Resources. I actually did have a look at Mineral Resources share price today, down 7.5%. I was like, whoa, that's down a fair bit. But that's after it was up 5.2% yesterday. So the share price in this company has been quite volatile the last few days. And I thought that increase of 5% in the share price yesterday was probably because of this announcement, simplified Marble JV agreement reached. Who knows? But let's have a look. Maybe I should just open up the announcement. I don't know. So maybe the market likes something here. As per the February 2023 agreement, the economic effective date for the revised transaction will be 1st of April 2022. Well, Albemarle will pay MinRes an estimated $380 to $400 million, including the net consideration for MinRes share of Kemerton and completion adjustments at Wodgina and Kemerton. And then the CEO of MinRes Lithium says these changes are a win-win for both parties, with MinRes and Albemarle, is that how you pronounce that, remaining great joint venture partners in the world-class Wodgina lithium mine. So too much for me to digest there. So when something's too much for me to digest, the thing I go to is the chart. How did the market react? Well, it reacted really well, but then today's share price is completely sold off. Is that because lithium apparently fell a lot overnight, 13%? So maybe that's why Mid-Resources share price dropped a lot, is because of what happened with lithium. Pretty big volume today as well. And just looking at the hourly chart, you just see the massive volatility in the last 2 days. So on open yesterday, on the 20th of July, share price increased 6.9%. So more than 5%, 6.9%. But then on open today, share price dropped 6.7% and kept on dropping. A little bit of buying in the last hour. But if you look at the hourly chart, there is no trend in the share price. And that's been going on for about since about April. So about 3 months now. Share price just going sideways, no trend in the share price. I do like the future of Mineral Resources though. And then today, second last company I want to show you is Bigtincan. Actually, third last, because I have one more company to show you. Bigtincan down 6%. They did release a business update. Anyway, so they're very pleased to announce they have completed the acquisition of Modus. Now, they did a massive capital raising, a $30 million capital raising, December, sometime last year, after they knocked back a takeover bid at 80 cents, and the capital raising was at like 50 cents or something ridiculous like that. And this company's management has been highly criticized because of those decisions. And they started talking about synergies here. I hate when companies use synergies. I don't like management speak. So I'm still talking about the acquisition of Modus. That should not be the first thing you mention in a business update. All synergies. We want to know anything about financial year 23 performance. Okay. So revenue in the range of 123 to 128 million, cash flow break even to be achieved in second or the fourth quarter, adjusted EBITDA to exceed 5 million. This is a company where EBITDA means absolutely nothing because they have a lot of amortization of their capital expenditure. I'm pretty sure they capitalize capital expenditure, and it can be a lot for this company. We can confirm that just by looking at their most recent Appendix 4C. They haven't released one for the July quarter yet. So if we go back, we can't see one for the... Does this company release any Appendix 4Cs anymore? I don't think they do. That's amazing. Let's have a look at the half-year results, and you'll be able to see it in the half-year results. And if we go to the cash flow statement, actually, no, we don't even have to go to the cash flow statement. We could just look at the amortization. Should be somewhere here. Amortization, subtotal of acquisition, that's acquisitions. Oh, EBITDA. So loss before income tax, 18.5 million. EBITDA, negative, loss before income tax. They have it in brackets. So brackets means the opposite of what you say. So when you say loss before income tax, then you have the number in brackets. That means profit. So it's like a double negative. But anyway, they had a loss of 18.5 million, EBITDA loss of 5.3 million. So to get to adjust a positive adjusted EBITDA of 2.1 million, they add back acquisition costs, share-based payments. I hate when companies do that. This is a big problem in America. Share-based payments are a real cost. And when you do EBITDA, you don't take that into account. Severance and advisory costs, subtotal of acquisition, non-recurring items, 7.3 million. So if we go through to okay, here we go. Cash flow statement. This is what I want to show you. So they're operating cash flow negative by $2 million, but capitalized development cost $9 million, which means they have to amortize that over time. So that's what you got to take into account when you look at companies like Bigtincan. When they just talk about adjusted EBITDA to exceed $5 million, that does not take into account amortization, which is a real cost for a company like this because they've capitalized amortization ever since they started as a business, more than likely. And so potential control proposal update. This is probably a really interesting thing about this, talking about how there was takeover bids for 80 cents. I thought they were talking about this a little bit more. And yeah, here they are. Bigtincan confirmed that the previously announced Bigtincan independent board in regards to takeover bid with a number of parties have indicated their interest regarding potential control transactions at or slightly above the indicated price of 80 cents. They're ongoing. So there is potential this company could be taken over at a price above 80 cents. Does the market believe that's going to happen? If the market believed that was going to happen, a takeover bid above 80 cents, the share price would not be at 46.5 cents. Not only that, the market didn't like this announcement today. How do we know the market didn't like it? Look at the 1 hourly chart here. Share price going sideways over the past month, just consolidating, and then all of a sudden, big selling came in today. Initially, share price rallied. Let's have a look at the 1 minute chart. So some suckers in the retail, more than likely retail investors, were suckered into buying some shares. Share price went from about 50 cents to 53 cents. So not quite a 10% increase in share price, 7% increase in share price. Then the selling came in, started at 10:16 a.m. So 15 minutes after trading had begun, and then continuing selling set the share price down 6% for the day. Nice little rally in the share price. It was down a little bit more. But yeah, don't be a sucker and buy in open just because you think the announcement is good. The market can think completely opposite from you, and there will be shareholders in Bigtincan. I see this all the time. Shareholders, retail shareholders, buy in and open. I don't like doing this. I like just to wait, just to see how the market reacts sometimes. Anyway, second last company I want to show you is Mosaic Brands. Ooh, up 18.75%. It was up a lot more than that, let me tell you that. And you'll be able to see that when we look at the chart. So this company did release an update, financial year 23 update. This was positive. Now, the market has been expecting this company to release some really, really bad news. You just see that by the chart. But Mosaic Brands swings into full-year profit with 10% comparable store growth. So Mosaic expects $17 million EBITDA profit. EBITDA is not a profit. I don't care. For financial year 23, a $33 million turnaround. So that's a good thing when you do see it comparing last year's EBITDA to this year's EBITDA, and there's a good growth in that. That's a good thing, in my opinion. But again, just give us profit. They even said in the notes here, so you can see there's a little asterisk here. And in the notes it says, EBITDA is a non-AASB financial measure. So why do all companies use it if it's a non-AASB financial measure? It's because they can manipulate it more. Anyway, the other interesting thing about Mosaic Brands is the really low margins. So this company expects total sales of around $520 million. That's up from last year, 6.2% on last year. Now, you would expect a company with sales of $520 million to have a fairly good market cap. The market cap of Mosaic Brands is 20 to 25 million. 28.5 million. I'm mistaken. Actually, it's probably a little bit more now. After, in fact, we can go to, should have done this before. We can go to market index. This is updated market cap, 33.9 million after today's announcement. Now, the problem with Mosaic Brands is simply this. The market expecting something pretty bad from this company. So share price was in a downtrend. Share price has been a downtrend since November last year. Share price got as high as about almost 40 cents in November. You can just see the share price dropping and dropping and dropping. So the market expected some bad news from this company. So even though the company said to the market, you're wrong, we're not going to release any bad news. In fact, this is good news. What happens when they do release this good news announcement, this good announcement? You can just see with his one-day candlestick. The share price high today was 29 cents. So why did 29 cents not hold steady, hold firm? Now, it would have held firm if the share price wasn't at these levels in November last year, or even through. If you look at the volume through from August last year all the way through to January, there would have been a lot of shareholders who bought, say, between about 23 cents and 38 cents. That's resistance. Those shareholders who bought in at that level want to get out of this dog stock. So as soon as they saw the share price rise to 29 cents today, they said, we have to sell. We are break even. We've got to sell, 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 sell. That adds pressure to the share price, that added supply because of that resistance. Those shareholders who need to get out. That's why the share price collapsed during the day. In fact, it went from 29 cents at a high and closed at 19 cents. I saw this announcement and went, yeah, I'm just going to wait. Just wait, because I would expect a little bit of selling. And even though this was a good announcement, and I think the market was wrong, the share price is still in a downtrend. So unfortunately for Mosaic, this wasn't the end of the downtrend. We need to see the share price rally further from here, or at the very least go sideways for like a year. That would be the best thing. Anyway, Mosaic Brands did release a good result. Share price up 18.8%, but unfortunately, share price still in the downtrend. Pretty good volume too. So 4.3 million shares traded. 4.3 million shares traded when, if you look at previous days, there was one day here we had 3,000 shares traded, another day, 7th of July, 15 shares traded. So really good volume. So what that also could mean is all those shareholders, or a lot of those shareholders who wanted to sell out, have sold out. So a lot of that resistance is now gone. Unfortunately, they have been replaced by other shareholders who bought in high prices now today, and that's more resistance going down the line. So what we need to see is those shareholders who bought in high prices, they need to become bored. When the share price consolidates, goes sideways, they become bored and sell out a loss. That's the best way to get rid of those sort of investors, if you can call them that. Anyway, there's one more company I want to look at, and I was or plan to do a standalone video on this company. That's called Endeavour Corporation. You can see no trading today. There's one reason there's no trading today, and that's because the company has announced a capital raising. So in these trading halts, there's usually 2 pages. The first page is from the ASX saying they're in a trading halt. You have to go to the second page. There are some investors who are confused by this. I've seen this time and time again. They read the trading halt and go, what's this trading halt for? And then they ask me, I say, just go to the second page. It tells you all about it. Anyway, this is from the company. First page is from the ASX, second page is from the company, and it tells you why they've gone into a trading halt regarding a proposed capital raising. Now, this company did a capital raising a year and a bit ago. I can actually tell you right now. We'll have a look at the 2-year history. It's going to take me a while to find it. It might have been more than 2 years ago. I should have thought about this before I started scrolling through. Dubbers. A lot of application for quotation of securities. Geez. Here we are. Capital raising and release of quarter report. July 2021. Successful $110 million institutional placement. Let's have a look at the share price at this particular placement in July 2021. Price of this particular placement was at $2.95. So they raise a lot of money, a lot of shares, 33 million shares, 110 million shares. So 2 years later, they need another capital raising. Not only do they need another capital raising because they are burning through a lot of cash, you'll be able to see the cash burn in a second when I show you the Appendix 4C. But, what was I going to say? I've just lost my train of thought there. But the share price is significantly lower. Again, share price 19.5 cents. Again, remember, they did this placement 2 years ago at $2.95. Just feel for those people who took part in this placement and have held on to shares. Let's have a look at the chart. Awful chart. And the main reason this chart is awful is because this company just burns through cash. They don't care. Share price got as high as $4.25 back in August 2021, September 2021. When the share, just after they did the capital raising. Horrible chart. So why is this company, you should stay clear of this company. Let's have a look at their Appendix 4C, their cash flow statement. And this should give you a good understanding why this company is uninvestable right now. Receipts of customers, cool, 10.2 million. That's great. That's nice. 36 million for the year to date. So that means a nice little increase in receipts from one quarter to the next, because maybe this was a record quarter in terms of receipts. But look at the spending. $9 million in product manufacturing and operating costs, $7.2 million in staff costs, $1.1 million in advertising and marketing, administration costs, just less than $1 million, research and development, $1.1 million. So just in product manufacturing and operating costs, that just barely covers the receipts from customers. Or I should say, receipts of customers barely just covers product manufacturing operating costs. Doesn't take into account staff costs, administration, advertising, and marketing. They burn through, in operations, this is just operations, they burn through $8.4 million of cash in this one quarter. In the financial year, they burn through $50.8 million of cash. So either they have to significantly decrease the spending, and why didn't they do this well before? Or they have to significantly increase their receipts to get to cash flow positive in terms of operations, and they don't spend much money otherwise. Cash on hand has fallen a lot. It's fallen from 84.4 million all the way down to 32.8 million. This is why they needed a capital raising, because they're burning through so much cash. Do they have any debt? No debt. So one company to stay well clear of, in my opinion, unless they show us some good growth. Let's have a look at the invested update just to see if there's something positive. Now, I haven't looked at this, so any company management or whoever decides how to set out this presentation will try to show you, sell you the positives. So adjusted recurring revenue, quarter on quarter, up 18%. Operating cash receipts, up 26%. Cash, 32.9 million. It's going to be a little bit higher after this capital raising. Operating cash outflow, 8.4 million, down 47%. And then they just talk about how good the company probably is, why they are the greatest company in the world, why communication service providers, question mark. Our solutions deliver net value on the network, but not value to shareholders. Out of the compensation, blah, blah, blah. Quarter fourth update. Strong track record of growth in revenue. Well, who cares about growth in revenue if you're burning through a lot of cash? The main thing is profitability and cash flow. They do talk about operating cash flow, but it's still significantly negative. Probably talking about cost savings here somewhere. Look, reported operating cash costs were 18.6 million for the quarter, down from 24 million. So they are spending less, but it's still not enough. So restructuring program has completed with a cumulative $3 million of quarterly savings. That's okay, but you're still burning through a lot of cash. They also have an outlook here. Expect $45 million of revenue financial year 24, increasing 50% on financial year 23. And all they talk about then is costs. Quarterly cash operating costs are expected to be approximately 17 million. And net operating cash outflow for quarter one in the range of 7 to 8 million. So still burning through a lot and lots of cash. Staying well clear of this one, my friends. Anyway, that's all I've got for today's video. 1 hour long video. If you have any questions about any company I have talked about in today's video, just leave your thoughts, your questions, your comments in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.